Hi, I'm your host, Sophocles. On this podcast, we discuss interesting stock ideas from around the world. The goal is to have meaningful discussions by getting into the numbers and better understanding the opportunity. Thank you for joining us. This podcast is being made available for educational purposes only. It should not be used for any other purpose. Full disclaimer at the end of the podcast. So today we have Austin Kreitz. He's a CFA charter holder and chief investment officer of Aurora Asset Management, Indianapolis. And I understand also a Cubs fan. Austin focuses on managing concentrated and long only equity portfolios using an intrinsic value framework. And today, we're going to talk about one of his positions. We're going to talk about Lovesac with the ticker symbol OVE. So, Austin, thank you for being here. And could you give us your elevator pitch for Lovesac?
Yeah, thank you for having me on here, Sophocles. So I would describe Lovesac as kind of the Lego of furniture. And, they started out making bean bags. If you think about the way a normal couch is made, you have one piece, or if you have a sectional, you might be able to move it around a little bit. But if you were buying a set of Legos and some of those pieces were stuck together, you have a lot less permutations that you can use. And so they simply broke apart the Legos and gave you more options, which just allows you more freedom to use the furniture as you want, update it like you want, and also allows it to be stacked on a shipping container much more efficiently. So it has a whole host of advantages there.
Oh yeah, and actually, when you mentioned it to me, and I went to the website and looked at it, and I was like, man, this is cool. And I like the sacks. They're bean bags basically, and their whole concept of the sectional, which is you put together the couch, your couch or sofa in whatever format you want. So starting with the bean bag, that their like original concept, and I looked at these bags and I was like, that looks so comfortable, I want one. And then I see it's like the cheapest one is like $600, whereas I got one locally, I think it was like 75 euros, and after a year I needed to buy some refills, and it was only like 35 euros just to get like all these little things you put in there. And so, I mean, is that a problem?
Well, I guess it depends on, what you're wanting out of it. But I would say that it's not really the same product. I had
Okay.
beanbags growing up and I loved them, but they didn't offer that much support. You really sunk down in it. And yeah, they wore out quickly. And with those inserts, they have a lifetime warranty on those. But essentially, the Durafoam is a mix of different densities of materials that they've put together to get the feel that they want. And this kind of harkens back to the origin of the company. So when Sean made his first sack, he essentially just cut up a bunch of foam mattresses, like camping mattresses, and anything he could find, and shoved them into some fabric. But then as and people started asking him to make more, and he decided to kind of turn it into a business. He found a local furniture factory that had all these scraps of foam that they used to make their furniture. And they agreed to sell it to him as long as he'd sweep it up off the floor. And so, anyways, from the very beginning, he was filling these things up with recycled material, essentially just because he could get it cheaply. But it also, if you sit on it, you'll notice the difference in terms of it's almost like it's not quite memory foam because it's not one constant.
Hmm.
It's still a bunch of things broken up, but it offers a lot more support. And if it starts to flatten it, you just turn the sack a couple times and let it kind of refluff. My kids love it. They think it's the greatest thing in the world.
And it's the one thing when I hear that story, it sounds inspirational, but at the same time, I'm wondering, really, I mean, this guy just like started cutting up stuff, and he made a better product than everyone else, and he's using this recycled material. Hasn't everyone else figured this out?
Well, it's not that big of a market. The sacks only
Okay.
represent maybe 9% of their revenue. So I guess maybe 60 million a year. It's just not that big of a market.
Mm,
So there's not a lot of incentive and it's not really growing anymore.
okay. So the foam, is this what they use also in the sectionals as well, or are they using a different material? Do you know?
No, I don't believe that they're using that um, in the
In the
sectionals.
sectionals. Okay.
Yeah,
So I think the
it just
sectionals are
wouldn't.
super cool.
Yeah,
They're
yeah.
super cool. I like that you can arrange the seats, but at the same time, I think it really depends on the end client because, I have a couch which actually does. You can actually do something like that with it. I don't remember, but it's like 16 years ago, and I sort of put the couch there, and I haven't really touched it since. So even though I think the concept is really cool. I mean, are there a lot of people rearranging it? I mean, I think you own a sectional. I mean, have you rearranged it? What's your experience been with it?
I actually do not, but I've convinced several people to buy them. So I'll give you just one example. And a couple years ago, my parents were talking about getting a new couch, and they're the type of customer that buys a new couch every 5 years because they decided they didn't like the color, they didn't like the arrangement, whatever. They just need a new one, and they're always rearranging. And so I was like, this is going to be a tad more, but, get a sectional because, the frames are a lifetime warranty. And when you decide, you can rearrange to fit the Christmas tree and everything like that as much as you want. And they do a rearrange probably every 6 months, it seems like, at least. And once you decide you don't like the color or the fabric, just replace that instead of buying a new couch because this is getting ridiculous.
Yeah,
And they love
yeah.
it. Um, it
And the
has that kind of
softness,
fee.
is the softness okay with, like, I understand. I think it's fantastic. Like you can change the covers and change the color, and it's like buying a new couch. But how about the softness? Because I was looking on their website and I looked through some of the reviews. Some of the reviews were like, that it's excellent, blah blah blah, and some people were like, it's not so soft for the price I paid, blah blah blah.
I mean, it depends on what fabric you get. From what I understand, it does tend to get softer as you wash it. Because they design this thing obviously to last a lifetime, right? And so you can take the covers off and throw it in the wash if you get a stain or something like that. You don't just have to live with it.
Mhm.
But and all that fabric is made out of recycled plastic.
Okay, okay, and I know that now they also put speakers in the couch, and I think that's just amazing. And like, how do those speakers charge? I mean, is there a plug or something?
Yeah, the couch plugs into the wall basically. And actually, that's just I don't know if I would ever spring for it because you're talking about I think $2,800 as an add-on, but it is really cool. I mean, if you're the type of person that does the surround sound, this is or likes to host parties for like movies or sporting events, then this will change it. It's sort of I liken it to here in the U.S. we have Super Bowl parties, and
Yeah,
it's always well you got to get the big screen before you have people over for it. Well, this is that
yeah.
because in
Have you
addition
heard it?
to
Have you
yeah
sat
I've
in one
sat
of
on it
these?
and what's really interesting, the speakers are all in there. You would not know they're in there, and if they were turned off, but you actually feel the vibrations and everything like that. So it brings a whole nother element to the experience.
I'd be afraid I'd spill the beer and the speakers would be gone.
Well, I
Or
think they're in there enough that you would probably have to put quite a bit on there to affect that. I couldn't find anybody complaining about that they'd broken the speakers for that reason. But they've done a lot of things um, around that. A couple of years ago, they built I think they call it the Power Hub. Essentially, it just creates an outlet in the middle of your couch because, and that's one thing that I really want when I eventually upgrade to a Sactional because we're always dangling cords everywhere and
Mhm.
I get tired of
And
that.
they've got also the wireless charging, which sounds fantastic.
Yeah, you can just set your phone on the armrest there and charge your phone.
So yeah, there's a lot to like about the company. I like that They have this ridiculous sales per square foot. I think they've even said it in their annual report that they're second only to like Apple and Tiffany. So small stores, lower cost, higher gross margin. The design, like you mentioned, looks fantastic. I looked at some assembly videos and I saw that, you got the seat, and the pillow is within the bottom part, and so you fit everything into this box. You can send it. I think you mentioned to me earlier that there was like 450 units can fit in a truck versus 45 couches, I think.
Something like that.
And yeah, so that's just fantastic. I know some people are complaining about the assembly, but I looked at the assembly on YouTube. To me, it looks a lot simpler than something, for example, you'd get from IKEA. I mean, I think, of course, IKEA is a lot cheaper, but I think the designs in IKEA can get a lot more complicated than what people are complaining with Lovesac, which to me seems pretty simple to put this together.
I've got the sack,
The sack,
which
okay.
is a lot easier. You just throw the cover on it. But all these things fit tight, and so it is a lot. That's the main complaint people have, is that when it arrives, you get all these boxes on your doorstep. Putting it together, I mean, it's a several hour project. I would say, yeah, it's less intimidating than assembling something large from IKEA, but it's not as simple as just having someone
Yeah,
deliver a
yeah, yeah,
fully
yeah.
erected couch to your
it's
house.
it's yeah, you just sort of have to be a little a bit of a perfectionist, that you're shoving that pillow into the cover in a certain way and using the velcro like they instruct. I also mentioned about their patents, and I was wondering about that. There's like 74 patents, and I was looking at this furniture and I was like, 74, really? That sounds like a lot. I mean, have you have you looked, what is this stuff?
Yeah, I have a lot of where they've patented are around the way that those pieces come together, so that the coupling mechanisms, and then the way sound travels through, because they had to come up with a way for that to be not affected by the fabric, to correct for it. So they patented that. A lot of things around stealth tech, and there's a lot of patents in there as well for products that they haven't yet launched or maybe never will. I think in 28 they have a couple patents for some sort of a workstation, and that was pre-pandemic. But for whatever reason, they decided that that wasn't ready to go, or maybe not viable. Um, and one of the things, though, that you'll notice if you look through there is that they've been patenting a lot of things recent in the last few years around bedding, and I believe that that's their next large market. I don't know when they'll eventually do that, but I think that's what they're eyeing, is basically doing the same thing for the that they did with the couch for the bed, and making it more design in their vision for design for life.
Okay. Now that you mention that, now if they do, let's say, that sort of bed, and I know they recently also did, I'm just looking at it over here, just recently did this pillow sack chair. Is that going to be a problem, like with their stores? Because if you have a small store and now all of a sudden you're doing like a pillow sack and you're going to do a bed and you're going to do a workstation or whatever, I mean, will they have to move into bigger stores, or have they said anything about that?
I asked them when I talked to them. I think the pillow sack chair really isn't too big of a problem, because they already have sacks in there, and it's just a frame that you can
Frame.
you
Okay.
can toss that pillow sack on. But I believe when they add I think everything for the living room, whether it's the sack or the sectional, will be able to fit within their roughly 1,000 square foot stores. However, when they pivot to a completely new product line, whether that's bedding or something else, I believe that they will need to open up separate stores. I don't think that they'll just enlarge the existing. I think that they'll probably find a spot close to their other locations, and go from there.
I certainly would like to see how they tackle the bedding part, just because if you have like, all these pieces, how do you get rid of all those gaps in between, right?
A lot of the patents that I've noticed, and granted, it's kind of been the language isn't that easy to understand, but the slats and everything being adjustable, headboard adjustable, things like that. I believe that they want to essentially make it so that, if you decide, maybe your kid is in a twin bed, and eventually they're going to want full size or queen, that you don't have to buy a whole new frame. Maybe you just add another,
Oh,
so you can just add on to it or shrink as necessary. Similar
I
to
see.
where, like, because like the Sactional, you could break that apart and create a love seat. You could send pieces, give pieces to
You
someone
could create a
else.
bed. You could create a
Yes,
bed with
yes.
this, actually.
Actually, one of my friends, I convinced them to buy a Sactional because they were moving into a one-bedroom condo, and they like to entertain, have family visit, and things like that. And let's just buy the Sactional, get the right amount, like right number of pieces, and you can turn it into a queen size bed.
I mean, even those large sacks they have, if they could manage to get those sacks, you could just lie it on a frame or something.
Well,
That would
I mean,
work
they're
out.
so big, you don't need one. I mean, when you fluff it up, it's probably 4 feet tall. I mean, they're large.
Now they sell through their stores. They also sell through Best Buy, Costco. How does that work? I mean, are they just renting space in those stores?
Essentially, yeah, and they're staffing it with their own employees. The Best Buy seems to work really well with Stealth Tech, the speaker system, because those customers are already thinking about tech type purchases, home entertainment when they go in there, and so it's a natural fit. Costco is more pop up, so they'll do 10-day shows like the folks that show up for AT&T or Verizon or what
Hmm.
have you.
And you mentioned before the CEO, the founder, Sean David Nelson. He actually also does the YouTube videos for the assembly. How much does he own, and who are the other major shareholders?
Uh, he does not own very much, and that dates back to in I think 2006 or 2007. They had a bankruptcy. When Sean started the company, no furniture store would buy these sacks because they were too unconventional. They didn't really know what to do with them, and so that forced him to start his own retail chain. And being an entrepreneur, when people saw that in Salt Lake City, there were some folks that liked the concept and wanted to franchise it. So of course he's like, yeah, we franchise. And essentially he created a structure that didn't really work long term. So he had a lot of bad franchise agreements, too much seasonal product, and so there was a lot of obsolescence, and a lot of the mistakes he made in that period really informed how they structured the business going forward. So private equity came in. Those most of those folks are still around. There's Satori Capital. I can't remember. One of them just sold recently, but interestingly, they're the chairman of that, the head of that private equity firm, bought the shares. So they've stayed on board, which is really interesting. Branham owns 8%. But anyways, yeah, Sean doesn't own that much, unfortunately. Obviously, he gets shares as part of his compensation, but it looks to me like he mostly got wiped out in that.
Mm, mm, mm. So, I mean, I'd like to hear what you think about him, because I watched his participation in the reality TV show, and he's this young guy, and he's like, oh, there's going to be Lovesac theaters, Lovesac limos, Lovesac lounges. Is he just a really good salesman, or is he like over promising type of guy, or was that just youthful excitement?
I think that's the entrepreneur talking. You've got to sell people on your ideas, but it also shows how much he's learned and grown. That was about 19 years ago.
Yes. Yeah.
Um, and now I would imagine he was probably entertaining those concepts because they were growing quickly. So probably had a lot of confidence and just wondering, oh, okay, what's next? Well, it just so happened that was 2005. The next year in 2006 was when they came up with the idea for the Sactional. And I think they probably recognized early on that that was going to be the future of the company. And so I don't know if he still has it. I've never heard him any other time talking about, cinemas or lounges or anything like that. So I don't think that that's still in the cards.
Mhm.
I think the experience he had in the mid 2000s really shaped, as I said, being a little bit more conservative in how you expand. So I think that's why he hasn't tried to tackle international yet, because, it's a big risk for a retailer to go into a whole new continent. And there would be a lot of overhead that would be associated with that. And so you're taking a lot of costs where, it seems like there's still growth domestically. So I believe he probably wants to scale here before he starts testing out other geographies.
Have they talked about Canada at all?
They haven't mentioned any specific country
Hmm.
or region,
Seems like
but
it'd be easier
yeah.
to go into Canada, I'd guess. But did you read his book? He has this book called "Let Me Save You 25 Years." Is there anything there we can? Any insight?
Yeah, I've read about half of it. I would say there's been a little bit that is new, but mostly he's just telling the story and his experiences and things like that. I wouldn't, if you're interested in the company, I don't know if I'd start there, but it is interesting. There's about a 20-minute video on their website that tells the story of Lovesac, and that gets most of it.
Okay. Okay.
He just expounds on different lessons he learned throughout the period.
So do you have? I mean, what do you think about the incentives? How are these structured? Do you have any view?
Yeah, I do. So they're based on revenue, adjusted EBITDA, and customer satisfaction scores. And anyways, I would prefer them to switch to something on a per share basis, because when they calculate adjusted EBITDA, they add back share based comp, and it's not huge, but it is meaningful, and I don't
Hmm.
like that misaligned of the incentives. Um, so I'd prefer something like that. And as they start to scale, maybe something on ROIC.
Yeah, I mean, I'll say one of the cons that I notice about this company is there's a few things that I'm sure the average investor would be worried about. One is you just meant we've been talked about it a little bit, the bankruptcy, and then two, they had to do this restatement, right? Because they were capitalizing instead of expensing some items. And then, three, there's also this unused media credits, wondering, is other people doing this? Um, is this normal? So if you could talk about those two things as well, the unused media credits and this restatement.
Yeah.
Uh,
Okay. So the media credits come from a relationship what they have with a company called Icon. So essentially, when there's open box inventory, they sell it to this company in exchange for media credits that they use for advertising. Yeah, there are some other. I can't remember who else does it, but it's not. They're not the only ones. It's not super common in that I think most retailers tend to use their clearance like a Nordstrom rack or sell through a TJX or something like that. But they spend a lot on marketing and advertising. Now
yeah.
they do want to be less reliant on that in the future. So they just leased a second warehouse or distribution center last year, and did an ERP transition. And a big part of that was to try to own more of that. When I talked to them, I mentioned that a lot of these pieces are being sold on Facebook Marketplace and things like that, and they monitor that. I brought up, wouldn't you like to kind of own that so that you can control the customer experience? And so I think that that's part of the roadmap there. But
And
for the
that's
time,
that's part of sales, right? These unused media
yeah.
credits.
So I have 12.3 million in the last fiscal year compared to about 700 million in revenue. Now they do have a lot of unused credits because there's a duration on those. So they have 29.2 million in unused credits. So those are part of prepaid expenses on the balance sheet.
Um,
6.8 million of those need to be used in the next 12 months. Given that they're spending 90 some million in advertising, that won't be difficult to do.
yeah, I mean, I was looking at that, 94 million in the 12 months fiscal year. That's 13%. And if you added that to cost of merchandise, it looks like, cost of merchandise plus advertising, you end up having like this sort of flat over the last 5 years. I mean, have they spoken at all about, are they going to continue to be this aggressive with their advertising and marketing?
I think that there's room for it to come down, but they haven't given any indication that they intend to do so. And I think part of it, they think it's productive in terms of, um, as of the 10K from fiscal year 23, their customer acquisition cost was just over $628, but the associated gross profit from that was over 3,300. So they feel like it's money well spent, especially because remember they're direct to consumer, so they're not going through other channels. They capture information. They know what you bought. So one of the things we haven't talked about is that the Sactional they're building as reverse compatibility. Any new features that they bring out, whether it's Stealth Tech or the angled side that they did last
Mhm.
year, will fit with the existing product. And so I suspect that at some point that marketing and ad spend as a percentage of revenue will come down because it'll just be more efficient because they can market to their existing customers. Hey, I know you have a Sactional. We just came out with, this. What do you think? 43% of the transactions are repeat. Now, granted, I suspect that's a lot smaller percentage of the dollars, but that should grow over time.
So for advertising, I'm just if I were to look a few years out, you think like something like 10% on sales would make sense. And I'm just curious, just running some back of the envelope here numbers. Uh,
Yeah, and for context, if you look at some of their peers, like Our House is another furniture brand that plays in somewhat similar of a market. They're about 4 to 5% in terms of marketing and advertising spend.
oh,
Restoration Hardware is way lower. That's a little bit higher end. Williams Sonoma is, again, like 5 to 7. Lazy Boy is about 5 to 6. There's
okay,
plenty of room
plenty of room. It
when
could
they
be
decide
half
it's
then. Yeah,
time.
yeah, yeah.
I model out it getting to about 11% over the next 9 years. I think that they could do that, but I don't want to. Given that they haven't
Yeah.
shown any indication of bringing it down, I don't want to be aggressive in that assumption. I
Hmm,
think
hmm.
the operating leverage that is there is on the rest of SG&A.
And it looks, they have fantastic gross profit. Seems it was like an all-time high, like 57%. You think that also is that sustainable?
I don't know. They are making some changes that should be you know sustainable. For a while, they were getting hit on transportation cost, importing all these things, and those costs have come down quite a bit. Just for context, I ran some calculations. I want to say out of sales, about 21% is just logistics. So I think that if you think about their gross margins are 10% or more higher than their peers, and a big part of that I believe is just the better efficiency in terms of transporting these things. They do have some patents coming off. I think next summer, and so if that could lead to some cheaper alternatives coming to market. Joybird had a product that was if you search modular couches, you'll find some out there, but they're not truly modular in the way that Sactionals are because of the patents on the way those things connect. And Joybird had a product on the market that was violating that. They came to a settlement. Joybird took that product up the market. I suspect it'll come back once that patent expires. And so there will be cheaper alternatives out there. However, that is part of the reverse compatibility in terms of them protecting their business. Because if you want to truly compete on the utility and quality of the product, you need to have all the features, right? And so that's why it's so important for Lovesac to continue coming out with new things, new types of Legos that they can add to this and patent it, so that if you're comparing, hey, do I buy this cheaper one or do I buy the Sactional? But it doesn't have all these other features that I can add to it. So, and if you're thinking this is a long-term purchase, I'm just going to, update it over time. You want all the options, right? You don't want to limit yourself unless you're truly price sensitive.
Okay, so I understand. So basically, what you're saying is, even if they lose some of the patents on, putting the couch together, they have new patents like the ones on the speakers, where if you're a new buyer, you want to have that option to be able to get
Yeah.
into that, or the wireless charging, or whatever other new thing they come up with, so that the additional features in itself sort of kind of in a way extends all the patents altogether
Yeah. Yeah. They're just
in a
kind of
way.
layering it basically, similar to
Okay.
like how a pharmaceutical company would.
So now they have 230 stores. I was reading they think they can get to what, 400? Is that right?
That's as far as I've modeled out. I want to say I've heard them say a larger number, but I don't remember off the top of my head. I mean, you have to remember though that nobody really knows. I mean, they have a best guess, but you don't really know you've hit the limit until your new stores start to become really unproductive. So it's hard to really know these things.
They're doing 30 new showrooms in 24. So it would take them, let's say, another 6 years to get to, let's say, whatever, 400, if they grow at that rate. I mean, how are you thinking about this? I mean, further out, because on the one hand, they are related to the housing market. I mean, so far, like for like is down. So the growth is coming from new stores. What do you, I mean, are you thinking about this, 5 years, 6 years down the road? They're going to have so many stores, and they're going to generate, I don't know, 3, 4, 5 million, whatever, per store. So you get to this sort of revenue number. Is that how?
Yeah, the way I've modeled it out is on showrooms, right? So I get them. I have the growth of that slowing. Just I don't I don't like to. They've been growing, showrooms 20-30% for a while, and when it comes to forecasting, I'm not really willing to um, put those kind of numbers out there. So I assume that growth slows
Mhm.
down to like 5% in 4 or 5 years, and then it takes them till fiscal year 33 to reach 400, and then I just keep internet and other as a similar proportion, because so that other is going to include the Best Buys, the Costco's, and then also the open box inventory. But I suspect that'll become a smaller portion over time. And I hold the internet sales constant, because a lot of that, you need the presence of that store in the community so people can see the product, whether they
Mhm.
actually book the sale in the store or not. It's hard to sell something, something somebody hasn't really seen and felt before for a premium price.
Yeah.
So they're either going to need to experience at a friend's house or a relative's house, or come into the showroom.
There's definitely a path where you can definitely see revenues doubling, I'd say, down the road. And
Oh,
then
easily. I
once,
mean,
yeah,
what they've the year ended February 2nd, 2020. Net sales were 233, and they're guiding this year from 700 to 770. So that's more than a tripling right there.
yeah, yeah. I mean, even if you were just to take what was it? Year end was 230 stores, and you were to just say revenue 700 divided by 230, 3 million per store. Then times 400 stores down the road, let's say, that gets you to 1,200. And this is very, very back of the envelope. Obviously, this is why I said, oh, okay. Well, then, they can definitely double and get to, 1.4, 57% gross profit puts you around 800 million. Then, if you've got like 10, 11% advertising, that's another 150, depending on SG&A, which is another thing I'd like us to get into. Depending on SG&A, you can see this having dollars per share down the road.
Yeah, it's and obviously when you play around with the model, I'm primarily using a DCF, but I do have a projection for EPS. Just and actually it comes around 10 or 11 at the end of that forecast period. But yeah,
Well, yeah,
there's with a
my analysis was only 5 minutes ago, so
but when you play around with the
yeah,
assumptions, obviously with a retailer, I mean, the potential outcome, we're talking about very wide distribution of potential outcomes here. So you definitely need significant upside to want to bother with this sort of thing. But just for some I guess shorthand that might just simplify the conversation. Lovesac's trading at 0.55 times sales on a trailing basis and 0.51 based on analyst estimates, going forward. Lazy Boy's at 0.72, 0.69. Restoration Hardware is at 1.41, 1.27, and our house is over 2 right now on a trailing. So the question is, with their gross margins are at least 10% higher than any of those companies. Is there any reason to believe that they cannot scale to achieve operating margins anywhere near those companies? And is there any reason why they won't grow faster, given that they have historically? Because the market is saying this is a significantly worse business or significantly more risky. And there may be some risks that don't exist in the others. The other part, I believe it's a, potentially way better business than any of those.
Yeah, it definitely looks that the market is definitely not pricing in any growth. I'm just pulling up some multiples here. It definitely looks like it's not. It doesn't believe that it's going to grow as fast as it says. So I think it's a matter of them showing some evidence that they're able to deliver. So it looks like with first quarter wasn't too exciting. It looks like they said they were pleased, but if I'm like looking at these and looking at operating profit, I'm like, gee whiz, they're pleased. So it's kind of like a back end 24 story. And it seems like I get the impression they really have to show the market before the market gives them credit.
Yeah. And you mentioned SG&A. I think that is a big thing, it's a big variable here because their SG&A is very high. A lot of this comes back to, they've been growing at an incredible clip for a long time. I think that one year they topped out at 55% sales growth, ending January 30th, 2022. And I think that revenue got ahead of their infrastructure, essentially. And that probably contributed to them needing to do the restatement when they incorrectly capitalized some inventory.
Yeah.
So they've been playing catch up, and you think about they grew faster than they anticipated, and so their SG&A came down as a percentage of sales to 33, not counting marketing and advertising, which was significant operating leverage. But I don't think that was really intended. And then so as they've been kind of playing catch up a little bit, so that they invested to catch up and then for future growth. And then all of a sudden now the furniture market is just terrible. I mean, you're talking about industry wide down double digits. So, they're not growing anymore. Currently, they're still taking market share, but it's a tough environment.
This company was 230 million in sales, in year end February 2020. So from 230, they went to 500 in year end January 22. So you can see there's some problems that result, but they still went on to go from 500 2 years ago to February 24 of 700, which is, just impressive. But which troubled me was I was looking at SG&A. It was like 32% of sales in January 22 year end, went to 30, almost 38%. Now that 264 million, it seems that there was some one-offs. If I understand correctly, there was this 13 million investment in business to support current and future growth. I mean, have they have they explained at all what
They
that
haven't broken
13
that
million?
down
They
specifically,
haven't.
but they added
Mhm.
point of sale systems, new point of sale systems in the showrooms. They did a CRM upgrade and the ERP. So there's been quite a bit of investments. And then, of course, with that restatement last year, they spent 11.7 million in
Mhm.
professional fees to deal with that.
Are they
So
done with that? Are they still spending money on that, on the
yeah, it's
professional
come down a
fees?
lot because since they disclosed that to the SEC, and so right now they're working with the SEC so that the SEC can finalize their investigation, and so they're still spending a little bit on that, but it has come down a good bit. So there is still, I guess, a small risk that they have to do another restatement, or they get fined in some way. I'm not expecting it, but you can't rule it out until that's closed.
Okay. So, I saw the 13 million. I saw the 12 million. I also noticed this is somewhat offset by the 6 million decrease in equity comp. So where you're looking at about, I guess one could say, a 19 million one-off sort of thing, sort of charges. So, and the reason where I'm going with this is that, okay, you have 32 million earnings before tax in 24, and it was 40 million 2 years ago. But if I adjust by this 19, then I get to 51. And even if some of those investments in business, let's say five, six of it is on current, then you're still looking at that earnings before taxes grew. Whereas if someone didn't break it out, then they're sort of looking at this declining margin, declining operations, at
Yeah.
if you don't make these adjustments.
Well, I think one thing to consider as well, and one of the reasons why it just doesn't look that great in a lot of ways in terms of profitability is when you grow your store counts that fast. Granted, their unit economics are pretty incredible, but they've got to spend roughly $500,000 in pre-opening costs for every one of those, and they opened up 24 in the first quarter, which is a lot for this size of a business. But if you're putting on 30 or so odd stores a year. So that's 15 million in CapEx slash, wages for people to get this thing, going. And then of course the store's not profitable from day one. Now, granted, they estimate that the payback is less than 2 years, but if you're thinking about that, they almost from the period ended June 30th, 2022 to end of last fiscal year, they grew the store count by 79. That's what, 40, almost 40% of their stores roughly that haven't gotten paid back yet. And so as that growth in store count slows as a percentage of the size of the business, that's where I see the SG&A as a percentage of revenue really come down because, you've got, and granted, they have about 6 employees for each store, 2 full-time, 4 part-time. But if you're putting through about 2.5 million, give or take, through each of those stores, you might have, in terms of, from what I can tell, somewhere around 330,000 in employee costs, gross income of maybe 1.4 million. So as those as those stores mature, assuming they mature the same way, previous vintages have, then that adds a material amount to the bottom line. In terms of like, if you added another 150 showrooms from here, you've got to make some assumptions based on how much overhead has to grow, but it could be 90 million or so in additional operating profits from that once they're fully up to speed.
Have they said anything that we're going to focus more on down the road on free cash flow and return on capital and reducing costs, or anything else that might indicate they're something that is going to be more market friendly, let's say?
Yeah. Well, when after the restatement happened, actually, well, before it was disclosed, they had switched CFOs, and so now it's obvious that this probably had a big part of the reason. But the new CFO has talked extensively getting operating leverage. I think he knows it's important to investors. Now, granted, given what's going on in the macro environment for furniture sales, you're not going to see a lot of improvement on that right now, but I suspect that that's going to be a really important thing for them to show. When they showed operating leverage on that SG&A line, the stock responded, and so I hope they remember that because they need to show that they can. They don't necessarily need to drop it significantly, overnight, but they need to show progress. Otherwise, these models just don't work in the same way.
Sure. What do you think it's worth?
That is a tough question. I put my base case around like $35. I think that they can do better on that. In my bull scenario, I've got it at 46. But I will say, when they had that period where it ran up to somewhere around the $100, I didn't sell anything. So,
yeah, you regret that?
It would have been nice because I would have been able to buy back more later. But I didn't know that.
Yeah.
That was going to happen, obviously. But I think in the right scenario, it could be worth a lot more. And I really don't want to truncate my winners, so.
Yeah, well, I think you can definitely see this. I've just been typing in some back of the envelope numbers here, and you can definitely see that with their current growth and them bringing in costs a little bit, they can definitely get to $10-11 down the road. And even if you have like a 15% hurdle rate, let's say, it still comes back to about $35-40 like you talked about just now, just back of the envelope stuff. So I think it's an interesting case. Do you have any other comments for the listeners?
Well, I guess just to provide more clarity around that, I'm not modeling anything for an additional, say, concept or international expansion, just because I think it's too difficult to try to figure out what would happen with that. That's part of the reason why I'm not willing to sell at a higher amount than what my model says, because I want to leave room for the potential that they are successful there.
I see. It makes a lot of sense because we've been talking about just these numbers based on what we've seen so far, which is just the sacks and the sectional, and we haven't put in nothing for the new seat. We put nothing in for the potential bed, and if those are successful, it could be significantly higher. So that's interesting.
Yeah, it's a volatile space. I would recommend anybody that's interested in the business to go, try the product if you're able to, and just get a sense. Without actually experiencing it, it's really difficult to get your head around the idea that you're going to invest in this small furniture retailer. You have to have that comfort there and the confidence, because there's a lot of volatility there. And obviously, when a business grows this fast, there are problems that are created, and it can be whack-a-mole. So
if someone wants to, find out more about you guys, or about you, Austin, or about the firm, where should I go?
Yeah, you can find me on LinkedIn or my website, www.auroramgt, like michaelgrantthomas.com. So I publish my blog there, and a pretty open book about my feelings about different companies or investment ideas. And I welcome any feedback people have. You can find me on Twitter as well. I don't think there's very many Austin Kreitzes running around, so it shouldn't be too hard to find me.
So that's CRITES, and it's
Yep.
Aurora Asset Management. It's actually, you can just Google Aurora Asset Management, and I see your blog, several interesting articles. Thank you for sharing all of these actually with just the wider public. And, just thank you very much for this really interesting conversation on Lovesac.
Oh, thank you, Sophocles. I really like doing these because it forces me to reevaluate, my assumptions, and you ask a lot of great questions. And any feedback I get from listeners, I love it because, the process. I'm a firm believer that when you buy a stock, the process isn't over. You've got to continue learning.
Yeah, yeah, we are. We never stop learning. Definitely a big plus for keeping our minds and little gray cells working. So thank you very much, and we'll talk soon.
All right, thanks.
Thanks. Bye. The podcast episodes should not be copied, distributed, published, or reproduced in whole or in part without the prior written consent of the host. These recordings are for informational purposes only. This recording does not address all risks. The podcast is not intended to be relied upon as a forecast, research, or investment advice, and are not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. The views and opinions of any podcast participants are subject to change and are not necessarily those of any companies affiliated or associated with the participants. The participants cannot guarantee the accuracy of the information in this podcast and has not independently verified the accuracy or completeness of such information or the assumptions on which such information is based. There is no guarantee that any forward-looking information will come to pass. Reliance upon information on this podcast is at the sole discretion of the reader and/or listener. Past performance is not indicative of current or future results. This podcast is being made available for educational purposes only and should not be used for any other purpose.